Kevin O'Leary's money rules for becoming a millionaire. Do you want to make millions of dollars? The shrewd Shark Tank investor, Kevin O'Leary has outlined a clear route to financial success, and it has nothing to do with chance or inheritance. It all comes down to self-control, making wise choices, and treating money with dignity. O'Leary didn't just make his fortune overnight, he cultivated and safeguarded it by adhering to a stringent set of guidelines. These guidelines have the potential to transform your life, regardless of whether you are drowning in debt or are just beginning your financial path. Are you prepared to make your money work for you and think like a millionaire? Let's watch Kevin O'Leary's most important money guidelines. 1. Don't just live within your means, live below them. According to Kevin O'Leary, the well-known Shark Tank character Mr. Wonderful, the first step in accumulating wealth is to follow the simple but sometimes disregarded rule: spend less than you make. Living below your means is a way of life for O'Leary, not just a short-term budgeting technique. He highlights that the majority of individuals are unable to build wealth because they mistakenly believe that having more money entitles them to spend more. However, discipline, not luxury, is the foundation of riches. O'Leary himself does not succumb to lifestyle inflation and continues to wear the same timepieces that he purchased decades ago. In actuality, you cannot invest money that you do not have. And if every dollar produced is equal to every dollar spent, you will not have it. He advises people to learn everything there is to know about their monthly cash flow, including what is coming in and what is going out. Step 1 is to be honest with yourself about your spending, reduce wasteful spending, and steer clear of the temptation of trying to keep up with other people's lives. Wealth, in O'Leary's opinion, is determined by how much you save and work for rather than how much you earn. You can start building compound wealth sooner if you can learn to be frugal with your expenditures. 2. Pay yourself first at all times. Paying yourself first is another of Kevin O'Leary's fundamental wealth-building principles. The principle is straightforward yet effective. Set aside a percentage of your income, ideally 10% to 20%, for investments or savings before you pay your rent, electricity, or even for groceries. Like a tax you owe to your future self, O'Leary views this as an unchangeable norm. The majority of people save what's left at the end of the month, but by then, frequently nothing remains. Regardless of your income level, this reversal of financial priorities guarantees that you're continuously increasing your nest egg. According to O'Leary, you should use this approach as soon as you can, preferably with your very first salary. Setting up automated transfers that transfer funds directly to a different savings or investing account as soon as you receive your paycheck might assist reinforces the discipline. Even little payments add up to significant sums over time. He maintains that paying yourself first, month after month, year after year, and letting time and compound interest do the hard lifting is the key to becoming a millionaire, not winning the lottery. 3. Steer clear of consumer debt altogether. Regarding consumer debt, Kevin O'Leary has a strict stand. Stay away from it at all costs. According to him, one of the most damaging factors in personal finance is credit card debt. A financial cancer that stealthily eats away at your future wealth is carrying a balance with double-digit interest rates, he said. O'Leary supports the use of credit cards just for incentives and convenience, not for financing. You are living beyond your means if you are unable to pay off your bill in full each month. He recommends a zero-tolerance approach for consumer debt and counsels those who have fallen into the trap to get out of debt as soon as possible. Although he admits that some debt, such as a company loan or mortgage, might be strategically advantageous, borrowing for depreciating assets, such as luxury goods, vehicles, or holidays, is a surefire way to end up in financial stagnation. According to O'Leary, the psychological burden of debt can also make you less inclined to invest or take measured chances. Removing consumer debt allows you to focus on building wealth rather than serving lenders, which is like taking the chains off your financial future. 4. Avoid putting money into things you don't understand. Kevin O'Leary is adamant about one guideline when it comes to investing. Never invest in something you don't completely understand. He frequently criticizes inexperienced investors' propensity to follow trends, dive into intricate financial products, or experiment with meme stocks and cryptocurrencies without conducting adequate research. According to O'Leary, making wise, well-informed judgments rather than gambling is how wealth is created. Due diligence is the foundation of his thinking. You have no business investing in a company or financial product if you are unable to clearly describe how it generates revenue. Additionally, he thinks that feelings should never influence financial decisions. Real investors are distinguished from speculators by their patience, logical reasoning, and comprehension of a company's foundations. Because dividend-paying equities offer observable returns in the form of consistent income, O'Leary himself has a tendency to favor them. This methodical approach lowers risk and enables him to base his conclusions on facts rather than conjecture. He said investment shouldn't be exciting, but rather dull, like watching paint dry. You're most likely doing it incorrectly if it feels exciting. 5. Never undervalue. Diversification's power. Diversification is one of Kevin O'Leary's fundamental investment tenets. Aspiring billionaires are frequently reminded by him to never put all of their eggs in one basket. Although focus might result in significant gains, it frequently causes far greater losses. O'Leary diversifies his holdings across a number of industries, asset classes, and geographical areas. Never allow any one stock or industry to account for more than 5% of your portfolio, according to his general guideline. In this manner, you won't be destroyed by a single error or market slump. He also applies this reasoning to his own sources of money. O'Leary frequently advises people to create several revenue streams, including side gigs, dividends, royalties, and rental properties. This diverse strategy increases financial stability and lowers susceptibility. It's also a major factor in his ability to weather economic downturns and keep increasing his wealth. The concept remains the same whether you are managing millions of dollars or just starting out with a small portfolio. Distribute your risk. Although the future cannot be predicted, you may prepare for it by reducing your reliance on any one source of income or investment. 6. Make every dollar work for you. Every dollar is an employee in Kevin O'Leary's mind, and it must be working around the clock. Idle money, in his opinion, is wasted potential. Money that isn't increasing, whether it's kept in a checking account generating no interest or put away just in case, is depreciating because of inflation. Thinking like a capital allocator, O'Leary urges consumers to consider where their money may yield the highest return in relation to risk. He stresses investing in assets that increase in value or produce cash flow. This could entail making an investment in a company, purchasing stocks that produce dividends, or contributing funds to a rental property. Making sure your money is continuously compounding and adding to your net worth is crucial. 7. Recognize that your most valuable resource is time. Kevin O'Leary emphasizes that time is the most valuable and irreplaceable resource when it comes to accumulating wealth. Your returns will be more exponential if you begin saving, investing, and managing your money early. People who put off financial planning frequently end up having to catch up later in life, since compound interest works best with time. Even if it's only a few bucks a week, O'Leary encourages young people to start investing with whatever they can. Those modest donations add up to significant wealth over many years. Early investment is important, but so is appreciating your time and allocating it to projects that will provide long-term benefits. Anyone may use Kevin O'Leary's timeless money rules to achieve genuine, long-term financial success. They are not just for the wealthy. Every guideline is based on self-discipline and long-term planning, from living below your means and paying yourself first to managing your finances and safeguarding your time. Deliberate activities continued over time are what lead to becoming a millionaire. It doesn't happen by chance. You may achieve financial independence by adhering to these 7 guidelines, regardless of your level of experience or desire to improve your approach. Let us know in the comments what you think about the Kevin O'Leary's money rules for becoming a millionaire, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.